All right, so the Dow's off for the third straight session, but managed to climb well off the lowest points of the session. You know, I've been talking about rotation here for a while. Out of these winners, especially those really high-flying tech names, those momentum stocks, also technical. The technical term for them is high beta names. Well, those stocks we've seen for the last couple of weeks selling off. We're talking the Facebooks, the Amazons. Started out as a snowball building into a boulder. Now, whenever there's this kind of selling, people start to talk about the fundamentals and they start to question those kind of things. I don't really think that's the issue. Those names, those companies will dominate our lives for decades to come. The more important question, though, is now what happens to all that cash that's leaving them? You see, the NASDAQ continues to get hammered. In the meantime, though, the S&P, the small cap Russell 2000, made another new high today. That's mostly new money chasing a breakout. In other words, those are hot stocks right now. But some of that cash is ironically shifting back into brick and mortar retail names. Now, my three favorite names, Tractor Supply, TJ Maxx, and Burlington Coat Factory. I love the way they're acting. And by the way, it's already early, but we know that holiday hiring announcements have begun. 100,000 at Target, 80,000 at Macy's. So that sort of underscores the notion that maybe, just maybe, it's too soon to write off the entire brick and mortar sector. We're going to get the latest, by the way, consumer sentiment tomorrow. That's going to be key. Also, don't look now, but crude oil has a stealth rally going. It climbed to over $52. That's a very critical technical resistance point. And this is where the crude rally fell back in May, sending oil crashing down to the point where, experts are talking about an even greater collapse. Didn't happen. Now, the biggest drivers right now for crude oil is a more somber, more humble OPEC and a decline in inventories here in America, although there are some signs of global demand as well. That would be a Goldilocks scenario. And I'm telling you, a lot of you guys push back on me when I say this, but I continue to think that crude at 60 is a net plus for America because that's where you get all those great jobs and investments. By the way, that brings me to manufacturing data out of Texas today. Now, despite Hurricane Harvey, manufacturing in the state came in significantly better than expected. General business activity was up, new orders was up, shipments were up, capacity utilization. Those are the foundations of manufacturing. This is the kind of data that is never talked about on financial television, but it's the measure that keeps me confident and excited about this economy and this market. Animal spirits are still alive and still doing very well. The thing is, you've got to maintain a balanced approach to this market, which means a variety of strategies, as those who are chasing stocks have been licking their wounds lately. Well, for more guidance, daily guidance, make sure you go to my website, wstreet.com.